The broadcast is now starting. All attendees are in listen-only mode.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310. And we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, 11th day of February, 2019. You've only got, let's see, you only got 2 shopping days till Valentine's Day. All right. Hope you had a great weekend. Hope you spent some quality time with the family. I saw you in church yesterday. Tip my hat as I do. Always good to see you there, as it is good to see you here. Yes, thanks for joining us. If you're returning, welcome back. If you're here for the first time, a very special welcome to you. We're glad to have you with us. If you can't see the charts, I have up right now a chart of the S&P 500 Emini Futures. If you'd like to see that chart and you can't, go to our homepage at cfrn.net on the right-hand side of the page. Click the big microphone, follow the instructions. You'll be registered in about 30 seconds. And if things go well, you won't ever have to register again. How about that? Also, if you're away from the desktop, working off a cell phone or a tablet, you go to youtube.com/CFRN/live, and there you will catch a live simulcast of every day's broadcast. Each and every day during the show, youtube.com/CFRN/live. Now, if you want to dive deep into years of past radio broadcasts, just go to youtube.com/CFRN. And by the way, thanks to the good folks over at YouTube for carrying the show. All right, let's take a look at the numbers around the world as they stand right here, right now. We're going to start in the U.S. The Dow is currently underwater by 28 points. NASDAQ is positive by 16. S&P 500 is up by 2, and the Russell 2000 up by 6. In the commodity basket, crude oil down 98 cents. That's almost 2%. Trading 51.74 last. Gold down $5.90. Trading 13.1260 last. In the Asian markets, at the close, the Nikkei was down 418 points. That's 2%. Shanghai rose 35 points. That's over 1%. And the Hang Seng showed up and gained 197 points. In the European markets at the close, the FTSE added 57 points, almost 1%. DAX up 107, almost 1%. And the CAC added 52, which for the CAC is a little over 1%. Mixed day in Asia, green day in Europe. And it's a mixed day here in the U.S. thanks to the Dow. Who has it right? The S&P or the Dow? Well, by the end of the session, we will find out. Take note on the screen. You can see the Sunday night Globex open here. We gapped slightly higher, okay, on the Globex open. Quickly reversed, filling that gap. We spiked down to, well, you know what? I'm just going to say it. Oh, there you go. Now I've said it. 27.01. Okay. Important prices, important areas, almost always tested. Now that was our last alert for the S&P on Friday by 27.01. Took us up to a swing high, 27.1275. Not a bad way to end a week on a Friday afternoon, even if you're only trading one contract. And then price dutifully came right back down last night off the Globex open. Got right below that 27.01 by 2 ticks. Consolidated and off we go. The high of the session so far today, the Monday session, has been 27.22/23, a zone from last week. The session low has been 27.05/27.06, again a weekly trading zone from last week. On Thursdays, when I give out the weekly trading zones to the entire CFRN community, not just partners, not just passport holders, but everybody, you might jot them down just, because they might come in handy the following week. Had you jotted these down on Friday or Thursday when I gave them out, I gave them out early last week, I think. Yeah, whatever. Plus, a lot of people had them because they were on the trial. Yeah. And a lot of those people also have this week's now because they're passport holders. And you can be too. If you were on the trial last week, the alert trial. Now, we don't have an alert trial every week. If you missed that, if you want to go in and look around and kick the tires, we preserved it. It's iced for posterity, as they say. You can go in, have a look. The zone, sliced it. Price did what? Returned to the zone it sliced. Consolidated, confirmed that it was indeed going to be good support. Sent it back to the zone. back in the direction of the slice. The same thing plays out time after time, after day, after week after week. I wrote a short post in the discussion trial, the alert discussion trial, over the weekend. Someone had asked a couple questions, and I just thought it important to kind of go deep for just a moment and explain a few things. I'm going to take that post and I'm going to bring it out into I'll post it. Let me decide where I'm going to post it. But I think it's something that everybody should grab a hold of. In fact, I shouldn't have started talking about it now because I don't have it in front of me and I can't share it with you, but I will. Before the show's out today, I'm going to read it to you and then I'll post it somewhere just for the benefit of everyone. Okay? Same things happen again and again and again. You don't have to know everything there is to know about the market. If you have one market truth, just one, that's not somebody else's truth, you believe it because you know it. You experienced it, you lived it, you worked it out, you were sleepless over it, you couldn't eat because of it, and then you could. If you have a quiver full of market truths that you picked up in a book or on the radio or the TV or at a $7,000 seminar in Vegas, it's not yours. It's not yours until you vet it. What I explain to you most every day about the zones, 3 things can happen if you understand that. Not just because I told you, but because you've witnessed it, experienced it, lived it, walked through it. Exactly right. See, that's enough. I know the markets look simple at first, and then we all find out, well, there's a layer of difficulty there that we had not really anticipated. Because when we go long, the market seems to go short, and when we go short, the market seems to go long. What the world is going on here? But if you have one market truth, as an example, weekly trading zones, not because Dwayne says, but because you have witnessed them, watched them, worked with them, one market truth. If you see this consolidation here, and you understand that the highest probability thing for the market to do as it starts to move up, evidenced by this, if you really understand that the highest probability thing the market can do is continue on to the zone overhead, same could be said for this move down. What else do you need? You don't. That's the key. You don't. But we got lots more. And speaking of lots more, let's go to Michael, get a recap of what happened in the live training room today. Michael, are you ready?
I am ready. I am
ready. He is ready. Take it away.
Okay.
I'll come back with, maybe a little bit of news and a little bit of John. And in the meantime, I got to get a little bit of coffee.
Okay. You go do that. I got it for the next 5 or 10 minutes.
We'll go with 10.
Okay.
I'm just saying I might not be back for 10.
Okay.
All right. I can see your charts. I'll drag it upstairs. There we go, to the big screen. All right. My friend, you are live. It's all yours.
Excellent. All right, I got this. Good afternoon, everyone. Today is Monday, the 11th day of February, 2019. 2019. 11th day of February. Okay. If you have not taken a free trial with us, go to the home page here at CFRN.net. Right over here in the right-hand column, it says 5-day free trial. You can click there, or you can scroll down to here where it says free 5-day trial, or down here. Any one of those buttons will eventually bring you to this page. Or all we ask for is your email, your first name, and how you found us. You click on that submit button, and you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click the confirmation link, we don't know that you took the free trial. So you got to click that confirmation link, okay? Okay. Spreadsheet. Today, we made up for Friday. We had a green day today. If you're going to read the spreadsheet, you're doing all the CFTC risk disclosures down at the bottom. And let's see. Wayne said no sound intro going on. You hear Dwayne now. I think everything should be good there. Yes. So today is the 11th day of February 2019. Today we made 6 ticks in the euro, 15 ticks in crude, and 1 tick in the ES. That put us up $200 per contract. Today it took 35 minutes and 2 trades to get to the goal for the day. At that point, we're up 107.50, and we took a total of 5 trade opportunities this morning. So on the month now, we're at 866.25. That's over 7 days, averaging $123 per day. The year, we're at $2,897. That's over 26 days, averaging $111 per day. Now again, this is 1 contract, 2 hours per day. 1 contract, 2 hours per day. The goal is to get you to ramp up to, well, more than 1 contract. Okay, now let's go take a look at what we did or didn't do. We didn't do anything in gold today, but we can take a look at it. You see right here in the pre-market, gold had some nice movement. Then when our markets opened up right in here, gold had momentum long trade, but you can't take those going into dynamic resistance. It had one right here that I missed, and that was it. That was it. Gold was just, well, all the action was in the pre-market right here when the euro opened up. Okay. Now on the euro, again, action in the pre-market. Okay. Our first trade, our only trade on the euro is right here, and we picked up 6 ticks on that. And then we waited all morning for it to get up above this level right here. And finally it did here, but then it tanked all the way back down to here and just didn't give us any trade setups. Not a single trade setup on the way down there. Okay. All right, on crude oil. Now, crude had some pretty good movement today. Started out here, it was kind of choppy, but then once it finally decided it was going to go up, it gave us some legs here that we could have used. So there was another one right there that I missed. Then that one right there, I picked up 7 ticks, and that one I picked up 8 ticks. Then it changed directions, and you know the markets go like this, right? They go up, and they come down. They go up, and they come down. They go up, and they come down. They go up, and down, and up, and down. Now, this one went below that low, so we weren't going long anymore. And the cycle was going down, way too steep to go long. But what we want to do is take out a piece in the middle here, like that, and like that. Okay, take out a piece of the middle. That's all we want to do. And that's what we did. In here, it was going down and up, so there was a shot right there to take some, and it pulled back. Another shot right there to take some, and it pulled back, and then the cycle was going up too steep. But if you would have jumped, you know, you would have gotten some more. Okay. Okay. Then it got pretty choppy in here until it got way over here. Over here, I didn't highlight it because I think I probably would have said it wasn't trending. And, you know, in the short term, you have lower highs and lower lows. But if you're looking back here, you really wanted to get it down here where it went. Then finally it went down there, and it gave one momentum short trade. That gave 1 tick and turned around and came back up. In here, you had to bounce off the BBC right here. Excuse me, I gotta take a drink. You had bounce off the BBC right here, and then it went up, and it pulled back, and it went up. And there are a couple of opportunities in here, it looks like. Right there, and the bounce off the BBC itself. Okay, and then the cycle started going down kind of steep. So we didn't have anything that we could do there. All right. Then it got choppy, as we went into the break. Got choppy. There was maybe a bounce off the BBC here for about 6 or 8 ticks. Then it switched directions again, and we had a long opportunity right there, and another one developing right now. Okay. Okay. On the ES, let's see. Well, we started out right in the weekly trading zone, and typical Monday morning stuff. We had a shorting opportunity right here that we missed. Then it got really choppy. There was another one here that we missed. Then there was a bounce off the BBC right here. We picked up 1 tick. And then we had a break even right there. Okay. Then it got really choppy in here. Made a big leg down without giving us any trade setups. And it looks like right here it had a short that didn't go anywhere that I missed. And then during the break, just choppiness. Nothing that you can do with this. Okay. That was the ES today. Excuse me. I got something stuck in my throat, it seems like. Okay. So that was 8 minutes long. Now we'll go back. We can start out here with the spreadsheet. If you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. Today is the 11th day. It's Monday, the 11th day of February 2019. We made 6 ticks on the Euro, 15 ticks on Crude, and 1 tick on the ES. That put us at plus 200 today. Today it took 35 minutes and 2 trades to get to the goal for the day. At that point, we were up 107.50. 107.50. And we took a total of 5 opportunities this morning. Okay. So on the month now, we're at 866 and a quarter. That's over 7 days, averaging 123 per day. 123 per day. On the year now, we're at $2,897. That's over 26 days, averaging 111 per day. Now, I know these numbers aren't huge here yet because we're still early on in the year. But what you got to think of is you want to be... hang on, I'm just looking to see why that's got that thing in there. You want to be considering that you're going to be adding contracts, okay? And so, like this column right here would be equals this one, okay, the 1 contract. And this column would be equals this one plus, where's my plus? There it is. Plus this one times 2. Okay, because if you added 1 contract per month, right now, this is where you would be. Not there. Okay. Anyway. That's that. And if you want to see all of last year's stuff, this spreadsheet goes back over 6 years now. And this is all of last year's stuff. And you can go back and see it for all the years if you choose to. Okay. Again, if you have not taken a free trial with us, go to the homepage at CFRN.net. Right over here in the right-hand column, it says apply.cfrn.net. If you click on that, you'll be brought to this page. And on this page, all we ask for is your email, your first name, and how you found us. Hit the submit button. Once you hit that submit button, you'll be sent a confirmation link. You must click on the confirmation link, okay? If you don't click the confirmation link, we don't know that you took the free trials. You got to click on that confirmation link, all right? Excuse me. All right, and that is 10 minutes. So with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A, overlooking South Mountain, America's largest city park.
Yeah, buddy. True story.
Excellent.
All right. Recap of the recap.
Today it took 35 minutes and 2 trades to get to $107.50.
That's a good bingo.
That's it.
So You were answering a question as I came back. What was that?
There was a question? I don't think there was a question.
No question?
No. No, Wayne earlier on had said he couldn't, the intro was going on and he couldn't hear you.
I had the mic on.
Yeah, no, everybody else heard you.
Everybody else heard me. Okay.
Yeah.
Okay. Well, that's good. That's a good thing, right?
Yeah. Yeah, he's good now.
Okay. Okay. I'm just trying to get my chart situated here. I think I've got it. Okay. And chart. There we go. One big chart. All right. Okay. Are there any other questions in the chat box? No.
No.
Okay. And is Jonathan here?
Not yet.
Okay. All right. Well, let us start at the beginning. Okay. We can do that. Okay. We can do that. Now, I'll bring up this so I can bring up this. There we go. Okay. All right. Let me just go over the alerts with you guys from last night and this morning. All right. We are now in week 27. Now, there's no trial going on this week. That was last week. However, what I have done is after an alert completes, I send out the alert into the live alert channel. When we have a resolution, like we did with the S&P here, and I just forward that over so that no, you're not getting the alerts live in real time if you're looking at the trial channel, but you can go in at any given time and see what has happened over the past few sessions or week or month. Okay, all right, fair enough. You got it. Now, last night began week 27. We said to consider being long the S&P 500 Emini Futures, 2708 to 2710 to 2712, trail if possible. We reached the target. The swing high was actually 2721.50. So from 8 to 21, what's that, Michael? About 13 points?
8 to 21 is 13 points. That's correct.
About 13 points, yeah. Okay. Now, I want to, let me address something that came up. It was a question in the trial, in the trial discussion group. Let me find that. And I think that's worth, I answered it in the discussion group, but in the discussion group in the channel, I don't have the access of audio or the luxury of audio and video. We just have still pictures. You know, I know, kind of prehistoric. We're working on it. Let me just scroll up to that question. I think it may answer a greater question that a lot of people have that I didn't realize they had. That's why I'm always begging. If you have any questions, ask, post. And someone did, and it gave me an opportunity to go into a pretty long explanation. Okay, and if I could just find the question. And thank you, T, for the question. TL. Scrolling. Oh, that's brutal. God, I guess there's a lot of stuff in here I didn't notice. Well, I can't get caught up in that right now. I'll have to look at those later. I posted, well, what started it was this. I posted a recap for last week, which I can show you here. Have my finger on it all along. Here. Last week, now this was at the end of the week. I did a midweek recap, and then this is the end of the week. We had 52 actionable alerts, and that's after I kicked all the no triggers to the curb, because we have alerts that ultimately sometimes don't trigger. Some of them, as I've explained in the past, I don't really expect them to trigger. However, if it should trigger, I know that the majority of traders out there are going to have a surprised look on their face. And whenever all the other traders have a surprised look on their face, if you don't, because you're monitoring your position, that's a good bingo. Okay. No triggers. How many did we have? 1, 2, 3, 4, 5, 6. We didn't have that many last week, only 6. Okay. All right. So we had 39 that reached their target or final target. 4 were classified as a PT or partial. Now, what that means, if it's a multi-target alert, if there's a target, a final target, or maybe there's a target, final target, it has to at least reach the first target. If there's only one target for that particular alert, it must go at least 60% of the distance. Okay, better than half, right? So we had 4 of those. 9 were stopped out. Once we kicked the no triggers to the curb, we're left with 52 actionable alerts. It's on a 5-session trading week. Out of those 52 actionable alerts, 17% of them were stopped out. And that number would be 1, 2, 3, 4, 5, 6, 7, 8, 9. There you go. All right. Now, let's get back to that question, which I will find this time. But I needed to give you that because this is what, it was this recap that brought the question. So, give me a second, and I'll find it this time. Okay. I'm almost there. I must be. I really wrote a lot. You have to go back and evaluate that. Okay. Okay, here we go. Look, this was a comment posted in the alert trial discussion group, but you can go there and see for yourself because it's open to the public. Okay. All right. And although I have copied over, some notes from the live channel since the trial ended, it's not something you can count on or depend on. You can't use it to trade by because I post what I think might be relevant to somebody in there, not specific numbers or anything. Okay. So the comment was, looking at the trades for the week, it looks like 39 profitable trades and 9 stop outs. If I apply that to just the ES, because this trader, I think, trades just the ES is the reason he was using that, it comes out to 9 stop outs at minus $2,700 and 39 profitable trades at $3,900 for a net of $1,200 using $300 risk per contract and $100 profit. So your risk-reward ratio is 3 to 1. Am I thinking right? Was the question. So in other words, this trader's understanding was that we risk $300 to make $100. Which day of the week do we do that, Michael? Michael's not there, man.
No day.
No day. She won. Okay. Yeah, no, we don't. We would never. That's just bad science. It's bad math. We'll never go there. Okay? Not intentionally, right? And by not intentionally, I want you to go read this, or I'll post this somewhere else, but the whole risk-reward thing, every trading book that you pick up, they're going to preach to you about the risk-reward ratio. Now, let me just say, you don't ever want to trade upside down. You never want to risk more than what you honestly believe the profit potential is on a trade. Now, there are methodologies out there and gurus and systems and all kinds of things that will have you risk, $300 to make 100, or $200 to make 100. So I can understand where TL came up with this, because it's out there and it's not good. It's bad science. It's bad math. It will catch up to you. It will harm you. Okay. Now, the legitimate trading books out there, okay, legitimate, right? They tell you about risk reward, and they say you should have, like, you risk 1 to make 2, or you risk 2 to make 4, 2 to make 5, or 3 to make 10, something like that. Okay. But they preach it, risk reward. Here's the problem. Now, I don't disagree that you should risk no more than what you realistically anticipate profiting on a particular trade. You should not risk more. Okay? So the lowest we'll ever go is 1 to 1. We'll risk 100 to make 100. We'll risk 1,000 to make 1,000. But nothing. We won't risk 900 to make 1,000. But here's the whole problem with that thing. You see, if I tell you that the risk reward on this particular trade is 1 to 1 or 2 to 1 or 3 to 1, yeah, only half of that equation, that ratio, is known, the risk. Whatever you risk on a trade, if you use a hard stop, and you must, otherwise you're not trading. Let me just say this: if you do not use a hard stop, you are not a trader. You are a gambler, and that's going to catch up to you as well. Okay? If you don't have enough confidence in the setup or whatever it is that you're looking at that is beckoning you to come in and place real money on this trade, to invest in this idea, if you don't have enough confidence to use a hard stop, you don't have a trade. So you can't be a trader because you don't have a trade. You can just sit down at the chair every morning, flip a coin, and place a trade. That's called gambling. You may have good days, bad days, but over the long haul, it's not going to be pretty. But you know that. Okay. See, if I'm going to risk $100 on a trade or $1,000 on a trade, that's a fixed dollar amount. That is a known entity. That integer in the equation is carved in stone. But the reward side, as it's called, and I don't even like that term. I don't. When I said profitable trades, the person who posted had said wins and stop outs. And I know that's just common in the industry. People use that. But even the risk reward, it's like, ooh, I'm going to get a treat. Or you give your dog a reward if he rolls over or sits or plays dead, right? You reward him with a treat. I don't want to be rewarded with anything. I come from a family with a good work ethic, by the grace of God. I want to earn my money. I want to win it. I want to be rewarded. I want to get paid. I show up every day because I want to get paid. Is there something wrong with that? I don't think so. It says in the Bible, he who does not work shall not eat. You want to do good works? You want to build God's kingdom? Guess what? Ministry costs money. You better figure out how to get paid. But you probably know that. Okay. So now that we've destroyed the fallacy of risk reward, you can never know how much profit. That's conjecture. That's vision. That's hope. That's a theory. It's an idea. It's an unknown entity. When you get triggered into a trade, you know exactly to the penny how much money you've risked if you're using a hard stop. You have no clue what the reward is, do you? No. Sometimes you get a cookie, and sometimes you don't. So why do we put so much stock in this risk-reward thing if it's not even a thing? But it is a thing. You got to hang your hat somewhere, right? Okay, so now let me go back to the comment. I'm really glad, TL, that you put this in, because I think this is something that might hang up a lot of people, trip them up, kind of confuse. And I'm just so glad you brought it out, and that I had a chance in the channel to discuss it, and that I'm having a chance to discuss it here today, because I think it's going to help a lot of people. You don't have to be trading with us. You don't have to be using our methodology or our indicators for this discussion to benefit you, because whatever methodology you use for trading, I'm sure you have at the forefront of your mind, if you're a trader and not a gambler, this risk-reward thing. Well, after today, sorry, spoiler alert, you may have to rethink that thing. But that's okay. Any day that we don't learn something, it's a good day, or a bad day. We should learn something new every day. And we will if we keep our eyes open and our mind open. Okay. I'm going to read this one more time. Looking at the trades for the week, it looks like 39 profitable, 9 stop outs. If I apply that to the ES, it would come out 9 stops at minus 2,700, 39 profitable at 3,900 for a net of 1,200 using 300 risk per contract and 100 profit, and your risk reward ratio is 3 to 1. Am I thinking right? Now, he wasn't certain. He said that was great. He ended it with, am I thinking right? So I had a chance to say, in trading, in the live room, we only risk 8 ticks per contract on any trade. We want to impress upon you that adding contracts will allow you to earn what you can without needing more points. The alerts embrace the same methodology. However, we build on our solid foundation. We do not want to risk more than $300 per contract per trade with the alerts. We actually want to risk less than that if we can. We do not use a fixed point value or dollar amount. Using our 3-step method, the chart will tell you where your stop loss should be. If the chart doesn't offer an acceptable stop loss, then you wait for the alert to trigger again, because as I pointed out earlier up on the screen, important prices, important areas are almost always tested, even when it spans a weekend. 2701 on Friday, 2701, 8:30 on a Sunday night, Eastern. Okay. If the chart doesn't offer an acceptable stop loss, we wait for the alert to trigger again, or we simply wait for the next alert. If a trade has a 2-point target, that's the beginning. Price will always attempt to go to the weekly trading zone above or below where price is right now at any moment in time. When an alert says tip at the end, that means trail if possible. Rather than automatically jumping out at the target, which you can do. You can get out at the target, you can get out at the final target. It's discretionary trading, so they're not the hard, fast rules there are in the live training room. There are guidelines. Because by the time you graduate from the live training room to the alerts, guess what? That is now how you think. And if that's how you think, well, now that you are moving into the world of discretionary trading, if that's how you think, all you need are guidelines, right? Okay. So, when we say tip, rather than automatically jumping out at a target or final target, we consult the chart to see if it is conducive to stay in the trade until an actual exit signal prints. And I've showed you the exit signals here on the show many times. Step line crosses the CFMA1. If it's a long trade, we wait for the first red candle to close below that step line after it's crossed the CFMA1. And vice versa for a short. TL read that, and his next comment was, so with the alerts, the risk reward then is 3 to 2. And in the room, it seems to be 1 to 1. I would like to see a 1 to 1.5 risk reward. And I don't know if that is realistic, but it would reduce the needed profit per trade under 50%. Just thinking out loud, thanks for your response. And my comment to that was, it's important to learn to read the chart. I will help you if you want. Never risk more on a trade than the profit you believe is possible from your analysis. Now again, the risk is a known entity, a known integer, but the profit is what you believe is possible. And that's based on your analysis of the chart. 1 to 1 is as low as you should ever go, otherwise it becomes bad science and bad math. The end goal is, 1, you learn to successfully trade the alerts. You will, over time, learn to spot opportunity the same as I do. If you focus on risk management, the profits will manage themselves. An example of the of what we were discussing is the final ES trade on Friday. It triggered at 27.01, had a target of 27.04, and hit a high of 27.09 just before the close. Now that's going to be, this is at 27.01. It's this Friday. There's the trigger. And there's the high, 27.0875. I called it 27.09. I guess it was the high, 27.0875. Yep, there you go. So I was a tick off. Now, 27.09 was a very pivotal area last week. And one of our newer traders, Bob, he mentioned in the discussion group, you'll see it if you go there, on Friday, he goes, you know, Dwayne went on and on this week about the importance of 27.09. He goes, we go through this whole crazy week, and at the end of the week, where do we close? You know? The close was 27.08, coming off this spike high at 27.0875. Oh, and the final candle hit 27, the high is 27.09. Okay, there it is. Yeah, 27.09 right there. All right. So I thought it was really good that he caught on to that, so much so that he mentioned it in the discussion group. He goes, after this crazy week, and Dwayne talking about the 27.09 to 27.09, we close, you know, right there. And I might add, where are we right now? 27.10 and a half. That dynamic has not changed. We're going to have to put some distance, higher or lower, between us and 27.09 before it is no longer a key player in what we're doing here. Okay. All right. So an example is the final ES trade on Friday. It triggered at 27.01, had a target of 27.04, and hit a high of 27.09 just minutes before the close. Okay. Right there. Got it? Okay. Sunday night. Now remember, I'm writing this Friday night. Sunday night, I anticipate we pick up where we left off. While it's always a good idea to close all positions before the end of session, we won't know the full extent of the move until the open tomorrow night. Okay, this was Saturday, I guess, that I wrote this. Now, so if we look at this as one move, right, we actually went from 27.01 to 27.1275. That was the entire move, and it stopped where, remember I said before, no matter what the target is, okay, when price hits the target, if it's headed north, like a heat-seeking missile, it's trying to find that next zone overhead. And if we're moving down, it's looking to find the zone below. Now, it's pretty easy to see. I think we missed it by a tick. Remember, zones are an area. Zone was 27.13. The high last night, 27.1275, right off the open. I'm not saying that to encourage you to hold a position like this open over the weekend. Not at all. Just saying you have to look at the chart holistically. You can't break it up into bits and pieces. Okay? That won't serve you well. So then we come right back to this area, consolidate at the zone, and off we go. We go from 27.01 to 27.21. Yeah. That's a 20-point move. Okay? It went from zone to zone to zone. See, this time it made it to the zone. This time it made it to the zone and the zone overhead. Right? Number 1399 was, so again, let me back up here. 27.01 had a target of 27.04. If you're in this candle right here, price is moving on up. And let me add a layer of clarity to it. If I may. Okay. 27.01. The target's right here, 27.04. You're in this big green bull candle. You've got your CFMA1 blue and climbing. Step line is on the left side. It hasn't crossed over yet. Let's look down here. Blue and climbing, blue and climbing. A lot of stuff coming together. Now, let me just say this. You cannot get out at the swing high or the swing low until after the fact. Because you don't know it's the swing high or swing low until after the fact. Right? Okay. Now, this exit signal, you could argue it printed on this candle, and you won't have to argue to say it printed on this candle. And that brings you, interestingly enough, right back down to the target at 27.04. Here's my point. My point here is not so much the exit signal, but when you're printing this big green bull candle, right? Now remember, this is a long trade. And in order to get out of a long position, what do you have to do? You have to sell, right? If you buy to get in, you sell to get out. There's an old saying, never sell a green candle. So, yes, we have a target here. And yes, we even have a zone here. But we also have this magnificent green bullish candle, a complement to our long trade that ultimately runs up 12 points. I can't get you out here at the swing high, because I don't know it's going to be the swing high till after the fact, just like you and everyone else. I don't care what their website says or that email you got. No one knows the swing high or swing low till after the fact. Now, you can get lucky sometimes. You can guess at it. If you make enough guesses, you're bound to get it right occasionally. But that's not high probability, right? So, as price starts to come off, you can evaluate your position. You can say, this baby looks like it wants to go back to the zone below. So, at the open of this candle, at the first hint of red on this candle, you could bail at 27.08. You just took that 4-point trade, or that 3-point trade, and you 27.01 to 27.04, and you managed to add 4 points to it. This candle opened at 27.950. Yeah, I would say you didn't get out to 27.08. You more than doubled the value of that trade by simply observing the chart, by understanding that the move's not over, or you don't have a sign that it's over until the step line crosses on an extended move. Okay, now on the short moves that won't serve you as well, but on the extended moves it will. Never get you out at the swing high or swing low, but it'll get you out. And never let it get you out at less than what your target or final target, if you have one, was. Okay. Now, number 1399 was to sell 27.12. Let me see if I can find that one up here. $13.99, 27.12. Oh, this one here. All right, yeah, this is a good one. Did I post buy 27.01 before the Sunday open? No, that was posted Friday. This is Friday right here, Mike. That was the last alert that we posted on Friday by 27.01. The reason I brought up what happened Sunday night is because important prices, important areas are almost always tested, even if it stretches over a weekend. We had an alert to get long 27.01. Price made its run up on Sunday night. See, this right here, this is the last, this green candle is the last candle on Friday. That's the close of the market. Gapped a little higher on the open Sunday night. We then came all the way back down, got below 27.01 by 2 ticks, took off for another move. Important prices, important areas are almost always tested. So does that help, Mike? Does that explain it? Type something in so I'll know. Otherwise, I'll go over it some more with you. Okay, all right, just want to make sure. All right. Alert number 1399 was to sell the S&P 500 E-mini at 27.12. Right here. Now, it triggered 4 times in a row. Once, twice, 3 times, and then there's number 4. If by chance you were in on the final trigger, the exit signal did not print until 26.9675. You entered at the trigger and exited at the exit signal. The move was about 15 points. This plays out over and over and over, day after day after day. Exit signal right there. Closed. This candle closed. See the step line crossed. We didn't get out of the swing low. Don't have that magic. Step line crosses. First, because we're going short now, the first green close above the step line. 26.9675. Which turned this into a 15-point move. Okay. Now, if you got out at the target, the final target, or the exit signal, that bell's for you. This dynamic plays out day after day after. You've been hearing me say the same thing for years. The same thing. Because the same thing keeps happening. Now, the market does the same thing every single day, but it just does it in a little bit different way. Joseph, $50 per point. Yes, that's exactly correct. 15 points times $50 per point if your math's right, if you use the calculator, that's that's $750 per contract. I'll check your math. It sounds right. Bingo. You got it. Now let me ask you this. Which is simpler? Which is simpler? A 15-point move with one contract or a 1-point move with 15 contracts? I'm not going to answer that for you. That's for you to determine. What kind of a trader are you? Do you want to be? What's your personality? I will say this. It's not every day that the S&P offers 15 points. We've had some great volatility of late. We've had some nice range of late. But go back through the history books, look at some old charts. You'll see that the average daily range going back 20 years is about 20 points. But some days less. Some days 10, 13, 12. And some days more. So if your goal is to, get 15 points, I'm going to take 15 points. I'm going to take 10 points a day out of the S&P. Okay? Even on a day that there's a 20-point range and or more, are you going to be able to find one move, one directional move for the 10 points? Or are you going to have to chop it up into a bunch of little trades, catch 2 here, 2 here, 2 here, 2 here to put together your 10? Or you just trade 10 contracts and take out a point or 2 points? Because I've never seen a day since 2005 when I moved from equities to futures. I've never seen a day that the S&P did not offer 2 points. Not one day. So if I can figure out how to get 2 points a day, theoretically, based on the last 20 years, I could get that every day. Yeah, well, theoretically, yeah, you could. Now, I'm certainly not suggesting that a new trader will rush out and start trading with 10 contracts, or 5, or even 2. And trust me, most new traders do, because it just looks so doggone easy. But as we know, it's not easy, but it can be simple. So here's the deal. We start our traders out in the simulator and the live training room. We want you to put together 10 consecutive days in a row where you reach your daily goal in 10 trades or less. Once you complete that exercise, it's time to go live with one contract. Utilizing that one contract and our methodology, we'd like to see you increase your account balance, whatever it is, by $2,000. Once you've done that, it's time to add the second contract. What you've done is you've laid a very solid foundation for the trading business that you are building. And that's what it is. It's a business. It's not the county fair where you win a prize for your best girl. No, no, no. It's a job. Sorry, it's a job. And if you show up every day and work, you just, I don't know, I kind of want to get paid. Just seems right. All right. You with me? By laying this solid foundation, okay, in Sim, you had 10 consecutive days in a row. Oh, by the way, you probably won't get your 10 consecutive days in a row first time out. Might have to start over a couple times, but that's okay, because you're building a solid foundation under your trading business. You increase your account balance by $2,000 with that one live contract. Now going forward, every time you add a contract, you are underwriting that contract with money you earned in the market. Now, if you continue this forward progression, can you see where you just might never have to wire money to Chicago again? Woohoo! Yeah, who doesn't love that? Did you know Chicago can actually wire you money? That's true. That wire works both ways. Most of us, you know, in the early going, we only had experience with just sending another 5K to Chicago, another 5K to Chicago. Pretty soon your banker thinks you're financing some kind of terrorist group in Chicago. Well, we're not, okay? Just trying to learn this business, right? Now, don't get me wrong. I'm not saying that as one of our traders, you can't blow up your account. Obviously, you can. But you're going to have to work very hard at doing the wrong thing. You're going to have to break a lot of rules. Because what our methodology does, if you get behind the curve, it puts you back in SIM. Where we have a one-on-one mentoring session, we sort it out, break it down, check it out, look it over, help you figure out what's going on, regain your confidence, and then you go live again right where you left off. You know, if you're on contract number 5 and all of a sudden things get sketchy, our methodology will put you back in SIM. You'll sign up for a mentoring session. We'll work through it. And when you go live again, you go live right where you left off at 5. You don't have to start at 1 again. Okay? All right. Now, so then, why do we have 15-point moves if you only need a couple points? Well, because we can, because that's what traders want. Just saying. I'm not trying to undermine what we're doing here. I'm just pointing out the truth. I know of at least one place on the internet where you can learn the truth about trading. And that's at CFRN. I can't speak for the other places. I know that there's plenty of other places that you can learn the truth about trading. If you go to Daniel's Trading, to their website, you speak to one of their brokers, you speak to Bert, they're gonna speak the truth to you. I have experience with them. I can speak for them because I know them. And again, there's lots of other places out there that speak the truth, but I can't know everybody, right? But those that I know, I try to know very well. Same goes for our traders. Once I know you, I try to know you very well so that I can help you and assist you in the best possible way. Okay. All right. So we've covered that. Now, what you have to do as a trader, okay, when you enter into a trade, I don't want you to trade an alert just because it's an alert. Because that kind of gets over into the reward thing. The alert comes out, the first thing I want you to do is go look at your chart. I want you to see the possibility. More importantly, I want you to see the probability. If you don't, ask. Let me teach you. Let Michael teach you. It's hard for us to teach you when you don't ask questions, because we don't know what you don't know. Okay? Okay. Questions. That's the key to your success as a trader. If you're part of the CFRN family, I can't speak for other programs and training and any of that, but for us, the key to your success is questions. Let us know what you don't know, and we'll help you know it, if we can. Unless it's something that can't be known, like the future. Remember, you can no more know the future. And so many trading sites out there, and so many emails that you get allude to the fact that they know the future. They're at the top of the heap, the king guru. Nobody can know the future. That's not how God built the universe. It's not biblically possible. It's not scientifically possible to know the future. You can't know the future any more than you can change the past. The day that you can change the past, come see me, because I think you're onto something, and boy, we're going to figure out the future. I don't think that's going to happen, but if it does, you call me. 949-42-EMINI. So the next time you get one of those emails, or stumble upon one of those websites where they're professing to know the future, ask them how. How do you know that? You'll probably be amused at the response. David asks, at this point on the ES, prices at the BBC, no bullish cross. Up until then, if a bullish cross occurs, wait until a BBC is support or bounce off, enter in at the next candle open. David, what time? I don't know what time frame you're looking at. Tell me what time frame you're at. You're looking at a 30-minute. Okay, are you trying to trade just the 30 minutes? See, if you're on the discretionary chart, so because it's discretionary trading, I don't necessarily know what I mean, you had your training in the training room, and so that should now be how you think. But with each trader, I find that different ones carry away different bits and pieces. Now, I wish everyone could carry away the whole thing, but you say a 30-minute chart, I'll look at it for you. Okay, we just had a bearish cross. The next trade is a short. So you're talking about what happens if there's a bullish cross. But, you know, don't deny, I mean, don't discount the fact that you already had a bearish cross. Could this be a head fake? It could. But you don't have any indication yet that it's a head fake. Are you with me? So from where you sit right now, what's the swing low of that candle? 27.08 and a quarter. 27.08 to 27.06 is a very high probability move, okay, from right here. Currently prices at 27.0972. I can't, it's all scrunched up in there. You see, we don't have a lot of room to work with right there. But if you put a gun in my head and says you got to make a trade right now, I would have to go 27.08 to 27.06. That is the highest probability thing right now. The whole dynamic of the chart changes with a bullish cross. Did the whole dynamic of the chart change with a bearish cross? Well, it's in the process of changing. See, what we'd like to see is price to pull away and pull back. Last night, in the discussion group, I told you guys, in fact, I've got that right here. Let me find it. I said something about a perfect world. There we go. Globex opened with a slight gap higher, quickly reversed and filled the gap. We already talked about that. An ideal scenario for the ESH9 would be a retracement to the 2700 area BBC, where we will look to get long for the next leg up. Now that was posted at 7:17 Eastern. The time you see on my screen is my time, Mountain Standard at the moment. But if you look at it on your screen, if you are on the East Coast, this time will print East Coast. Okay. So an ideal scenario for the ESH9 would be a retracement to the 2700 area BBC, where we will look to get long for the next leg up. And look where now I said I posted that when we were about here, yeah, and look where price came. Didn't get 2,700. The swing low there was, I missed it by 2 ticks, and that's okay. It's an area. We didn't take advantage of this one. We waited until this one, and our alert was to get long at 2708. There we go. By 2708. Now from 2708, where's the high probability move? 2713. Me being conservative, I think I pegged it at 12. We'll look at that in a minute. I'm going to walk you through all the alerts. So we had a bullish cross. Price pulled away. Price pulled back to physically touch, and we got long. So while, yes, because of the bearish cross, we could go 2708 to 2706 right here. Or we can let it go to 2706, pull back to the BBC. Now the BBC is starting to hook down like this. You see how it's hooked up here, hooked down here, flat right here. So while the move to 2706 is high probability, that's just setting us up for the higher probability. When you've got red and falling, and red and fall are below the 50-yard line, when the cycle can't get above the 50-yard line, it crests, it rolls over. It doesn't get much better than that, honestly. And then over here, what do we got? Now, these are measuring and tracking a lot of completely different things. Okay, but blue and climbing. I mean, we break through that 50, right at that bullish cross. Boom, right up to 2701, right up to that high right there, back to the BBC, and there we go. The dynamic repeats again and again and again and again. All right. Okay. Let's go back to where we were a moment ago. Yeah. Week 27. Okay. Oh, come on. There we go. And there we go. Okay. 27. Okay, so we just went over that S&P. All right, there's one more thing I want to add. From 2708 to 2712. But the zone's at 13. Right, the zones are an area. So it might fall a few ticks short. Just saying. In my mind, do I expect it to go to 13? Yeah. But if I want a truly high probability trade setup, do I have to allow for the fact that it might come up short? Sure. And it might go beyond. Yeah, that could happen too. As it did. And the chart allowed me to stay with this if I choose to, because it hasn't given me any sign. It's a big green candle. That's not typically a sign that the move is over. Right? Okay. So why even put the 10 in there? It's a gut check. At 2710, I want you to be aware of your surroundings. What does that mean? If you're running into trouble, if you're running into headwinds, if the move looks like it's got no get up and go, if it looks like it's get up and go, got up and went, you should probably just go ahead and take the 27.10 and be done with it. If on the other hand, you have beautiful separation between you and the CFMA 1, why jump out of a perfectly good trade? I mean, it's a choice. Remember, it's discretionary trading. You get to make the choices. You make the decisions. You can stay with it. You can get out. It's up to you. But at 27.10, I want you to look around. I want you to make sure, what time do you post on Sunday? We post, Michael, from 5 p.m. Sunday afternoon, or 6 p.m. Sunday afternoon, until 5 p.m. Friday afternoon. I'm not sure exactly what you mean. You mean, do we start putting out alerts at 6 p.m. Eastern on Sunday? If that's your question, yes. Okay. All right. And if you'll answer what I just asked. Yeah, okay. So that was what you were asking? Okay. So yeah, we're open 6 p.m. Sunday night to 5 p.m. Friday night. All week. 24/7. Okay. After the S&P, the Dow, 25090 to 25120, trail if possible, it ran to 25,214. That's this one. Sunday night, the Lovex Open. Stay 10th. Right there. February 10th, 1800 hours. Globex Open. Price pulled back to the zone and the BBC. This is a continuation of Friday's move. Pull back, get long, and go. 25090. Right there, 25090, and this swing high was 25,214. Exit signal printed 25143. Okay. All right, and then we had the Russell. 1510 to 1523 in tip. You know, don't even count this one because it was a typo. It's rare that you'll see me put out an alert that has a 13-point target. It may say trail if possible, but I typically won't go that far out because that's assuming an awful lot. It did do what I expected it to do, but yeah, I wouldn't even count that in the recap because I typoed it. It happens. And when I see that no one corrected me in the channel, it's because I know that they know what I was talking about because they've been around and they've watched this for so long. All right, last night, Globex Open, right here. Where does price pull back to? Yep. Same spot. All right, and then from 1510, which was the trigger right here, we didn't make 23, but by golly, we sure got 13, which was just below last week's zone at 14. Well, why not 14? Same reason. It's an area. NQ, I forgot to put out an NQ somehow. I don't know. I got distracted. So, would we have done basically the same thing? Yeah, pretty much. Pretty much. You posted at 5:41 a.m. for the ES. Well, let's see. 5:41 a.m. I forwarded this from the Logic 247 trial. No, not the trial. From the live channel, I forwarded it over to the trial channel so that people could see what happened. I forwarded that over this morning. I know what you're getting at. And no, I'm not trying to pull the wool over your eyes. I'm about as transparent as they get. Transparent to a fault, my contemporaries say. Originally posted Sunday, February the 10th, 2019 at 8:13 p.m. Was that your question? In the trial, when we're having a trial, I post them live in real time. Once the trial's over, I will post the alerts after the fact when I have time to forward them over. That's all, just so you keep track. So yeah, you're safe. I'm not pulling the wool over your eyes. And all the people in the channel can attest to such. All right, what else we got? I don't know, Jim. I don't know. I don't know where he's at. I haven't heard from him. I haven't checked in the. I haven't checked. I've been yakking. Let me see if he's here. Let's see. I don't see him. Are you there, John? No. I didn't call him either. And
no, I don't see him.
Okay, Val, thanks. Yeah, we're going to wrap up here in a minute, so. Oh, you're wondering what I'm doing up so early. It's a 24/7 alert service. So your next question will be, well, when do you sleep? When it's going to be a few hours before the next market move. When the market has backed itself into a corner and I know it's got to fight its way out, and that takes time. Those little cigar boats, man, those things can turn on a dime. But if you were ever in the military or the Navy, or if you've ever just watched a movie like Pacific, for a aircraft carrier to, if an aircraft carrier is steaming north and they get an order to head south, well, they can't turn like a cigar boat. It's a really big ship, and it takes a while to get that thing pointed from due north to due south. S&P 500, it's that big ship. Yeah, occasionally you get V-tops and V-bottoms, but not that often. You see more V-bottoms than you do V-tops. It's usually a rounding type thing. And so you get to know. Plus, when you have the framework of the zones, the Concierge Trade Alerts, which is a static report good for the whole session, when you have all of these different things to provide you with confluence, triangulation, then it's, well, that's how. That's how. And Richard, no, I think Ed called me over the weekend. I didn't catch his call. He didn't leave a message, but I'm going to talk to him this week. We'll get together. He's left me a message. I've left him a message. So hopefully he'll be back on the show this week. But thanks for asking. Okay. In Q, oh, just as we talked about on the S&P over here. Oh, did we do it? 27.06 1/4. Now, could this thing turn back up and go higher from here? Of course. Oh, there's John. Hey, John, welcome to the show.
Hi there. How are you?
Good. Good to have you with us.
Thanks. Sorry I'm late.
No problem.
Sorry, go ahead, because you were in the middle of talking about the S&P there, which was interesting. It is a bit tricky right here as to whether it's going to break out to the upside or come off a little bit more. But those two early spikes, sometimes you get a sort of resistance cell there, which, if you remember, a couple of weeks ago we said we thought we'd get up to this level, and we came off it, and then we're having another go at it. And I think ultimately we're going to break up through this 27.25 area, and the metals came down a bit overnight, but they still don't look too bad in terms of they appear to be consolidating in a similar way to where they were before we broke out upwards the last time. The problem is platinum is heading for new lows now. That's a situation that could potentially, you know what I mean? You see what I mean? The way this gold bounced off this morning, and you know, if it can get back above 1316 or, you know, 13 up, it could go for a run. It kind of feels to me like, you know, as long as it doesn't break down further from here, it could actually, if it holds in this range, it could break out pretty dramatically.
I'd like to see 1317, but yeah, I agree with you that that's the area. It sure is.
Yeah, and look, the dollar is right at the highs today, and gold is up. You know, gold is down a little bit, but in terms of, I mean, if you look at where, you know, what's been going on is that gold has been going up and the dollar has been going up, and that's very bullish when that happens because at some point it does appear to me as if the dollar is going to break out to new highs, having had several attempts to break down, and it's come back from the brink a few times. Now it could just have one spike here, or it could be headed even higher. And if it doesn't, if the metals do not suffer particularly from that would have to be a positive. On the other hand, a lot of the commodities are heading back down again today. The grains in particular. So much for the 5 million ton order that just didn't seem to do anything for the market.
Okay, what about the grain report?
Oh, I don't know. Maybe it's out today. I think it came out today, actually.
Today's the 11th. I thought someone
said
it was...
Or maybe tomorrow. Maybe tomorrow.
I heard it was supposed to come out last week, and it was supposed to be for 2 months because of the shutdown. They weren't able to put the... Let me just go back and... Does this thing give me a shot at last week? It gives me yesterday. That's just China. Today. Well, all right, let's go look at we'll look at soybeans, and that'll kind of tell us what the grain report had to say, I guess. Hang on. Okay, ZSH9 soybeans. Well, this is a 30-minute chart. Let me throw it on a daily and put it in some perspective. Okay, well that, you know, if that's what happened, if last week, Thursday or Friday, we got 2 days or 2 months worth of grain reports, this doesn't look to me like a chart that's seen a grain report. But I saw it on the calendar last week. I just never went back and looked at the numbers. So I don't know, John.
It might have got delayed as well, so I really don't know. But you know, if you look at the week, check out the weekly. Let's see what that looks like. Yeah, see, we're right there at the brink. You know.
Yeah, we are. It looks like it's poised for a report, but it may already be out. Let's go weekly. Okay. Here's weekly.
Doesn't look very. I mean, you can never say never with the grains, because if we did get an upward reversal from here, it could change everything. But right now, just have to sort of wait and see. The wheat has been acting better. It's been holding fairly firm for a long time, the wheat. So.
Well, I haven't looked at wheat in a while. Let's take a peek. Yeah. I used to find some interest in wheat and corn. I just don't get excited by them anymore.
Yeah, well, there hasn't been really any big moves. That's the thing. So,
why do you think that is?
Well, it's oversupply of crops and you know, hanging around the lows, basing out. But you know, something could change. You know, I mean, obviously, what can happen with the grains is that you get these kind of spells where it looks negative, and all of a sudden, bang, they have a big rally. And you know, whether the weather is going to have something to do with it, whether this cold weather could damage the crops and make it not good for things. Hold on a second.
You need to get it? Go ahead. All right. Okay. All right, so we walked through, hang on. We made it through the Russell, natural gas, 269 to 272. When I recapped it this morning, it was 274. 4. Okay. GN units. We had a gap higher open last night. Now, you've heard me say a lot of times that futures almost always close the gap on the indices relatively quickly. With other markets, other futures markets, I can't speak for them. I have not studied them as closely, but I do know that I've seen natural gas gap a number of times and just do what's called a gap and go, as opposed to a gap and fill. Anyway, the alert last night was 269, which is right here, 269, and the target was 272, and we put in a swing high at 274.4. So that was a good beat, though. The pound, 6B. So 12.935 to 12.915. $12935. There we go. And the swing low so far, 12867. And this morning, consider buying the NQ at 69.57 to 69.67 and tip. NQ. $69.57. That move was, let's see, the swing high. Oh, yeah. 57 to 67 a tip. The swing high was 69.66. Missed it by a tick. So for the record, that's a PT, and I talked about that earlier. The difference between FT and PT. So that's recorded as a PT. Also, alert number 1431 to buy the S&P at 27.19 to 21 to 24. The swing high was 27.21, so it made the first target. It did not reach the final target, so that gets a PT designation. And then on the Dow, no trigger, and on crude, no trigger. And that brings us current through right now, right here, right now, everything that's happened since the Globex Open last night. If the ES was a buy at 27.08 at 8.15, that would have been a stop out. I'm sorry, Mike, that's not the case. That was not a stop out right there at 27.08.
There's a risk of this thing breaking down here during, the VIXs are taking off here again, and we've had a pretty good run up, but there's these delays with the China thing that could I was last night we were down at I guess we were down at this level, yeah, and I mean we've given back everything we gained during the night right now. I mean, on the NASDAQ we got up to 69.70, and here we are back at 69.05 again. It's not very good action, and most of the stocks are pulling back now. All of them: Facebook, Amazon, Google, Netflix, the whole bunch. They're all kind of coming off here. So we might be, like I say, I'm not kind of turning particularly bearish, because we've seen this sort of movie before. It just pulls back to the people who didn't get a chance to buy in this morning. the market comes back to where it started last night, and it could rally again into the close. I mean, if it rallies this afternoon, I'd definitely turn more positive.
I think we'll see potentially 2,700 on this move, and then that's going to become a real decision point for the market.
Yeah. But it's worth keeping in mind, as we've been saying, that and remember, you know, there's two factors to rally into now towards the end of the month. There's the Korean meeting, and there's also the you know, the Chinese trade deal shortly thereafter. So the market is probably going to have a tendency to rally into both those events. You know, I was thinking when I saw that meeting last night, or not last night, recently, and you know, watching these Grammys last night, you see that Korean boys group, you know, the really very impressive guys.
I didn't see that.
You know, but it reminded me, do you realize, Dwayne, about 2 years ago, remember when I said, remember this was a long shot back then, I said Korea will go the way of Vietnam, eventually North Korea. And, you know, sooner or later, what I said is sooner or later, when are they going to get the memo, you know, about it's not worth being the next Vietnam, you know what I mean? And this was 2 years ago, before everything, you know, when things were pretty hostile. And it's actually coming true. I think this is part of Trump's plan to bring Kim down to Vietnam, to show him, look, we were at war with this nation for, you know,
I didn't even
50
think
years
about
ago.
that.
Yeah, right. You remember when I said that? Remember?
Yeah, I was thinking, well, you know, neutral territory.
Yeah.
No one has a home court advantage. But yeah, he's bringing them to Vietnam, and he's going to say, take a look.
Yeah, we were at war. We were in a bit of war with these guys, and they're best friends now, and you can be too. You know, it's just not worth the. And I think Kim gets the memo. Remember, I said to you, don't rule out the day you'll see Kim at Madison Square Garden sitting with Trump at a basketball game.
Yeah, that guy may be weird, but he's not stupid.
Exactly, and you know, dictators. I mean, you saw what happened in Romania. Remember that one? It was a brutal takedown, and you know, Venezuela. Same thing could happen any day there. You know,
King Solomon was the first example of that. He went stark raving mad.
Yeah. No, the people in Venezuela, I kind of feel there's a coup coming. Of either the generals are going to knock him off or something. You know, because he really, you know, there's something seriously wrong with the whole scheme down there.
Now, Hitler ruled because of his the Svengali effect. Is it Machiavellian? The power that he seemed to hold over people. There's never been anything like it. I mean, he had power like at his peak. You know, this Kim doesn't have that. He doesn't have the stage presence, if you will.
Right, exactly.
He's ruling by brute force and nothing else.
Yeah, I mean, you know, I think it's interesting. You know, Putin. You have to respect Putin over a lot of things, and you know, when you. I mean, can you imagine Russia today without Putin? If Putin hadn't been around, I don't think Russia would be anything like where it is today without him, because he's restored a lot of pride and a lot of you know, prestige to the country. He's done an incredible job, considering it was a basket case back in the 90s, and he's a dangerous character too. But I think he's smart enough to know, having come from, remember, this guy who grew up in St. Petersburg, which was had just an unbelievable, when it was a 2-year siege in World War II, and 2 million people were killed or died of hunger. I mean, that's a very, very big thing in the Russian psyche, you know.
Right.
But when you look at the remnants of Berlin after the war, and Hitler on the ash heap of history, you know, it's a pretty good wake-up call for any dictator not to overstep. You know what I mean? Not to become, because ultimately these guys who do get out of control, whether it's Saddam Hussein, whether it's Gaddafi, or whether it's Hitler, they all end up the same way. Eventually, the free world will take them out sooner or later, and unfortunately, the stakes are too high today because of we're in a nuclear age. So everybody has to be that much more careful, you know. But this guy, you know, strides around on the world stage and enjoys it, and so does Kim. You know, he's kind of gotten the same sort of treatment recently in terms of stature in the world, and he's probably loving every minute of it. So
he's probably more respected now than ever, because, in part, due to Trump.
For sure.
He's rubbing shoulders with the big dog. So, yeah.
Well, look, Trump has a way of anointing a lot of people. I mean, there's a lot of people on CNN today who wouldn't be there if it wasn't for Trump. You know, whether because Ashley, I think it is, April, or she's a colored lady. She had a sort of a thing with Trump, and after that she became, you know, a commentator on CNN and got elevated. And then there was the one on Fox, you know, Megyn Kelly, who,
yes,
you know,
yes.
Yeah, she owes, you know, she probably made $100 million thanks to Trump in the last couple of years, you know, because, you know, she was kind of an unknown before that, you know, Trump kind of anointed her. And the same thing with this guy, Acosta. You know, his stature is elevated considerably, you know, being thrown out of the White House and things. So, you know, and ultimately, I mean, they're so obsessed with him every day that if there is a, you know, I tell you, they'll be hollering for him when he's gone, and they'll be harking back to the good old days. And I think people are getting soft. You know, the times are so good today. That's where all this socialism thing is coming out. Everybody thinks it's suddenly got easy and all this money sloshing around. You know, I think that's where a lot of it is coming from.
Yeah, yeah, they're going to miss him when he's gone. That's for sure.
Yeah. So
the market's holding steady here at last week's weekly trading zone of 2705/2706. That was the swing low last night. Came down to 2700 and a half. So if this doesn't hold, I'm gonna give 2700 some credence. In fact, I'm pretty.
By the way, I think that Amy Klobuchar, that new lady who just joined yesterday, Amy Klobuchar, she's a bit of a dark horse. I'd give her. I think she's going to be one of the finalists.
I'm not familiar with her.
She gave a pretty good speech yesterday. You know, she's got a way. She kind of gave a heartfelt speech. It was one of the better speeches of all the newbies out there, all the new contenders. And I see that 60 Minutes or CBS was pushing Schultz again last night, doing a repeat of his 60 Minutes interview, and all you know, bringing up all his past. And a lot of these guys did have a rough past. You know, they had a rough childhood. I mean, even Elon Musk had a very tough childhood. But look at where he is today. People who get knocked around when they're kids tend to do pretty well in life.
But you know, this AOC, Alexandria Ocasio-Cortez, making all this noise. I mean, she's been on the job since January 3rd of this year. That's her tenure so far. I mean, are the Democrats so desperate?
I think she's got a good advisor. That's a lot of times. I mean, look, if I can tell you right now, I don't think Obama would ever have made it to presidency if he hadn't had some of the people behind him, you know, who
he
really
was a community organizer. He never had a real job in his whole life. He was a puppet president.
And that's what's going on with Ocasio. She's getting, you know, all this stuff that she's putting together is coming from her, a couple of guys who are behind her, and they're pretty smart guys.
If she's the new face of the Democratic Party, this nation is going to return to its roots. I'm so thankful for her, because if she's going to be the poster child for the Democratic Party, then even the Democrats are going to see how foolish. Their whole
Well,
agenda
they're going to overstep their mark. They're either going to do it through impeachment, or they're going to continue this continuous beating up on Trump. I mean, you know, if you saw any of the interviews with,
well, in order to impeach him, there would have to be an impeachable offense, which there isn't.
Well, look, you got both the the House and the Senate investigations have both said there was no collusion. So, you know, and then Schiff comes out and he's going to go a sweeping investigation of Russia. Hello, it's over. You know, it's kind of, he's like flogging a dead horse. And, you know, it's kind of looking the same way with the Mueller thing, unless some sort of a bombshell comes out here in the next few weeks. So, and that's going to reflect very well on Trump. Look, even in spite of the shutdown and everything, he's back to 50 on the popularity now, and he's got a pretty good chance of breaking up through 50 into the mid 50s or higher in terms of popularity pretty soon. But you know, I wouldn't listen. It's not the next election isn't going to necessarily be a walkover. He shouldn't ever think that. I don't think he does. It could be a very tough fight, and he could come up against, you know, what may be a formidable challenger for one thing or another, you know, and it may be a female, and she may be better than Hillary. So, you know, you have to consider all these things. I think that Amy is probably a leading contender amongst the women. I don't think the rest of them have a chance against her. She's kind of like the quintessential Midwest type American, and that's a big deal. You know, it can resonate with a lot of people, and I think a lot of people see themselves through her. So I would consider that to be quite, you know, something that needs to be taken pretty seriously. And because she's fairly conservative, you know, she's going to be kind of down the center. She's going to draw a lot of you know, possibly even the independents and Bernie's people. So, you know, all of these factors have to be taken into account. But ultimately, the Democrats are probably going to overstep their mark, and sooner or later, the whole wall. I mean, you heard about, you know, now they're estimating that 42 million people want to come to the U.S., 5 million a year or something, and they really need to get a grip on this, because it's going to spiral out of control. It's going to be like Germany or the UK, you know, and look, the numbers are much bigger than most people think. You know, the 25 or 30 million. I mean, if the numbers are that high,
if you want to go somewhere, you better get going, because she's going to shut down the airports.
Ocasio, yeah. No, that's
how ridiculous. Now, of course, there's gonna be exclusions for congressmen, because of course they have to fly to Washington and they have to fly back home to their constituents. I don't suspect they're going to start taking the train again, or stagecoach.
By the way, you know, I mean, this global warming thing, you know, this. The fact of the matter is, the sun, it's not the Earth, it's the sun. The sun is the global warming problem. For the last couple of decades, you know, we've had a lot of sunspots, a lot of solar flares, and the temperature has gone up in the world. But it's changing now. And we predicted, you know, we've talked about this during the summer. There's going to be one of the coldest winters ever. And it actually is. I mean, when have you ever had this much snow in Seattle? A friend of mine had 8 feet of snow in near Reno yesterday, in the last couple of days. The previous year was a record. I think it was like they had 57 feet or something for the whole year. Something incredible number. Excuse me. The one volcanic eruption can produce more emissions than all of humanity for a year. I saw that yesterday in a somewhere. And as you know, I've said on this show, there's more stuff coming out of volcanoes than humans ever produced, ever. And so this business about trying to change global warming is just impossible. It's never going to happen.
Yeah, as Joseph in the audience just said, the temperature goes through cycles over the years, and it's how God created this thing.
Absolutely.
Now, is the second law of thermodynamics at work? I'm sure it is, but it's not gonna. We're not going to see it. We're not going to see.
Well, it's actually the ocean currents. The ocean currents are the big regulator, you know, and this business of the melting. I mean, you know, in recent years, the ice has come back quite virulently, and it's probably, and right now, I mean, it's probably iced over more than it has been in years. I mean, these temperatures are really, really cold. And obviously they're icing up.
Half the nation is below. Half the nation a week ago was below zero, and they're still blowing the horn about global warming. Well, that's why it's so cold, because there's global warming. Now I'm going to have to think about that.
There were almost no twisters last year, so was that a good thing? Yeah, of course it was. I mean, you know, there's some benefits to what we've had, and the crops, you know, the highest yielding crops ever. There's a lot of good things. It's all a lot of garbage. I mean, it's just, you know, we just have to deal with the cards we're dealt, and you know, if we have good years and bad years, that's been going on since time began. So, you know, any farmer will tell you that.
Right. Yeah. Yep, I agree. Anything else you want to cover?
No, listen, thanks very much for the invite, and look forward to catching up with you tomorrow. Thanks very much.
See you tomorrow. Have a good
Bye-bye.
Have a good day. Bye-bye. Okay, guys. All right, we walked through each of the alerts. Tomorrow we'll recap the Concierge Trade Alerts. I try to switch back and forth. Mike B in the audience, I pointed out to you, see, you're correct in the time that the alert came out, but the alert triggered, if you look at my chart, I said in the chat box I said 5 a.m., but it's actually, if you look at the screen, it's 3 a.m. that we triggered long the 2708 alert. If you just follow that vertical line down the chart, you'll see it's lit up down there, 3 a.m. Eastern. Okay, I just want to make sure you understood that. All right, and with that, do you see it, Mike? I had typed into the box there, but you might have missed it. See, this is where it triggered. This was the Globex Open. Okay. The alert itself went out at, oh, let's see. The alert went out at 8:13 p.m. my time, which was 10:13 Eastern. And so the 2200 candle is right here. This is the candle when the alert went out last night. These are 30-minute candles. And this is where it triggered. Okay? Okay. All right. Just want to make sure you had that straight. It's now time for the good word for the day. By the way, if anyone wants to go in and take a look at the alert channel, get a hold of Val, support@cfrn.net. She'll give you the link. You can go in, take a look. If you have any questions, you could usually reach me in the Telegram channel. Just search on @CFRN1, the number 1, @CFRN, the number 1. And that's my handle, I guess they call it. When I set it up, I didn't even know what they were asking for. I would probably just put my name, but anyway, that's how you can private message me if you want, or you can post a question in the discussion channel. You can. Now remember, when we are having an alert trial, everything gets posted live in real time. If I post it in the live channel, and I copy it right over into the alert channel. Now that the trial ended last Thursday, and so what I do now is, once we have an alert and a disposition, I simply provide those who have access to the trial channel an idea of what's going on and what's happened over the course of the day. Just as I come on the show and recap them, all I'm doing is putting a recap over in that channel. And you can tell the difference. So if you have any questions, get a hold of me. Always available, most of the time. Stand by. So, sometimes in life we get frustrated, aggravated, constipated, and and it seems like that's when everybody wants something, needs something, and things go wrong, and we just scream, "Leave me alone." Right? Ever felt like that? Not you? Okay, just me. Mark 5:17, the crowd began pleading with Jesus to go away and leave them alone. The Bible says, when those who had seen what happened told the others about the demon-possessed man and the pigs, the crowd began pleading with Jesus to go away and leave him alone. Mark 5:16 through 17. Now, we all know the story about the demon-possessed man and the pigs going over the cliff. What we never hear about is the man who owned those pigs. That was his livelihood. He's standing there, he's not bothering nobody, and all of a sudden, his whole flock of pigs, I don't know what they call a group of pigs, but all his livelihood goes diving over the cliff, I wonder about that guy. Anyway, it's not addressed in the Bible, so. Now, these people, this crowd who had witnessed this, demon-possessed man, demons get sent into the pigs go over the cliff. They had witnessed an astounding miracle. Yet they were pleading with Jesus to leave them alone. Have you ever offered to pray for somebody and they draw back like you just threw scalding water on them? Try to put your hand on their shoulder and say, "May I pray for you, brother?" And they just draw back. No. It's kind of the same thing. Now, why did this crowd ask Jesus to leave them alone? Well, maybe they were afraid he'd interfere with their livelihood. He might send their cows or their chickens over the cliff. Or they thought he was so powerful and unpredictable that they didn't want him messing with their lives. Either way, they wanted no part of what this Jesus had to offer. Leave me alone, God. Maybe you haven't used those exact words, but are there areas in your life that you'd just as soon he didn't get involved in? Pastor Mark Roberts says, if we put into words our secret thoughts, mightn't they sound something like this? And I quote, "You can have me when it comes to my family life, but leave me alone at work." Or perhaps, "You're welcome to touch my public actions, but don't mess with my daydreams." Or, "I'm willing to give you a tithe of my income, but leave the rest of my money alone." Or, "I'm happy to have you in my life, Jesus, but don't ask me to forgive my parents." Or perhaps, "I want you to be my Lord, but I want to hang on to certain areas of my life, my behavior. I want to keep on sinning in certain ways and resist you when it comes to certain relationships." Most of us have no problem surrendering most of our life to God. And that's where we should get concerned. Think about your own life. What piece of the pie have you kept for yourself? "Jesus, you can have all this, but my money, that's mine. Don't be messing with my wallet." Or my whatever's important to you. Here's the deal. It's all or nothing. I can just stop there. It's all or nothing. God wants all of you, not just a part of you, He won't settle for less. He wants to be the God of every aspect of your life, your relationships, your finances, all of it. Your work, your leisure, your up, your down, your good, your bad, all of it. Including that one slice of the pie that you've not yet handed over. Your relationship with God could dynamically change today if you're willing to surrender that last thing. It's up to you. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with the licensed securities broker or financial planner before making any investment decision.